Shri Gurubhyo Namaha. Welcome all my dear brothers and sisters for a wonderful updation towards our subject requirement. Here we go with respect to statutory updates for November 2020 examination. Even though entire country and the world ruins in pandemic, department is in no rest. They continue to do the reforms and ring the changing bells in GST. That necessitates us to keep us running and keep up with the pace of the department to abreast ourselves with these updates, not only for the examination but also for the practical sake. But before I get into this practical updations, one announcement from CA Institute, which is a solace, which is basically granting us a bit of relaxation, is this COVID related measures, relief measures which has been introduced by the department has been kept outside the scope of examination. So when I say this, wherein due dates for the filing of returns have been extended, due date of all compliances have got extended because of the COVID impact, those will not form part of examination. Barring that, impactful 19 amendments are grouped up or lined up or gifted by the department to us to enjoy and upgrade ourselves for November 2020 examination. And what all it's going to cover? It is going to cover various sectional amendments which has been brought in with effect from 1st January 2020 and various notifications which has been effected up to 30th April 2020, which is a relevant cutoff date for November 2020 examination. Here we go, my dear. Enjoy the upgradation, be in bliss. Let's start the discussion. The first and foremost learning for us is from the chapter number 1 itself. In chapter number 1, even though it does not seem to be a big impact, there is a one MCQ which is possible is, what is the tax applicable? Is Dadar, Nagar, Haveli and Daman and Diu, is it a separate union territory or one union territory? Majority of us might not be aware of because medias never gave the kind of attention which a union territory or a reorganization act requires, because we all witness just an extraordinary amount of exposure and cover towards Jammu and Kashmir and Ladakh Reorganization Act, but Daman and Diu, Nagar Haveli and Dadar Nagar Haveli Reorganization Act, Merger of Union Territories Act, has never got that much of limelight in the media. The reason might be this is not actually an area of dispute in India, a very calm land, but this came into effect from 26 January. The impact of this is what? The impact of this, previously it was 6 union territory without legislature was present. Now it has been turned into 5 union territories without state legislature, and the number of states is 28 with state status and union territory with state status being 3. And all this 28 plus 3 states, 28 plus 3 union territories with state status, they will be applying CGST and SGST in case of intra-state supply. Whereas this 5 union territories, wherein you should understand, prior to the amendment, Dadar and Nagar Haveli is a separate union territory, Daman and Diu is a separate union territory. Now this 2 union territories brought into one united union territory. So the 5 union territories along with Dadar, Nagar Haveli and Daman and Diu, they will be charging CGST and UTGST for intra-state supply. So that's one impact wherein this is a probable MCQ. What are the 2 aspects which they can ask you? Point number 1, from what day this particular amendment came into effect? 26 January 2020. Remember, Republic Day, Reform Day, so that it's easy for you to knock it down. And my dear brothers and sisters, in case of this 5 union territories, the applicable being UTGST, as you could all see, it's UTGST governed. So Dadar, Nagar Haveli and Daman and Diu is going to now. So let me give you a simple solution here. If at all an intra-state transaction is going to happen, intra-state supply is going to take place. Intra-state supply is going to take place in any of these 28 states, and 3 union territories, Delhi, Pondicherry and Jammu and Kashmir, because all these 3 is having a state status. So what are the types of taxes it will get attracted? The type of taxes is CGST and SGST, including Pondicherry, including Delhi, Pondicherry and Jammu and Kashmir. We will be having only SGST. We will be having only SGST. Whereas in this 5 union territories, whereas in this 5 union territories, which is Andaman and Nicobar Islands, Lakshadweep, Dadar, Nagar Haveli and Dominant Diu, Chandigarh and Ladakh, these 5 being without state status, UT/GST is getting into applicability. That means for intra-state supply. For intra-state supply here, what are all the taxes will levy? CGST and UT/GST. UT/GST will get applied here, my dear. And in case of interstate transaction, both the cases IGST will come into picture. And that's the impact of intra-state transaction. My dear, likely MCQ. Mark it important. Go ahead, my dear. Enjoy. Make a note of first amendment. My dear brothers and sisters, as I said, chapter 2 has not got any amendment this time, but chapter 3 is making most of what chapter 2 has missed out. All eventful amendments has happened in chapter number 3, and here we go straight away. Chapter number 3, we all will be mindful. This itself, the enter list what I have struck down, enter list number 15 with respect to renting of motor vehicle, in itself an amendment for May 2020 examination. I myself have covered the same as one of the amendment area for May 2020 examination. My dear, that amendment has lost only a limited shelf life. It has lost its shelf life. It has got replaced by a new amendment. It has got amended by a new enter list with effect from what day? With effect from 31st December 2019, meaning thereby this amendment has happened after 1st November and up to 30th April 2020. Then meaning thereby this is a new amendment. Applicable only for November 2020 examination. A changeover. My dear, I'm blowing down a caution here for all of you guys. If at all anybody who is actually watching this, who has actually prepared for May 20 examination after watching the amendments for May 20, you have to correlate 2 statutory updates and you need to strike out this particular amendment from May 20 examination, and you should carry over this with this new one, right, my dear? So let's go, and or somebody who has prepared straight away for November examination with the outdated ICAI material, straight away the provision for US. Please learn this as a new one rather than comparing the old one. So my humble suggestion will be just ignore that May amendment. Ignore that May amendment. Straight away come and learn the amendment which is for November as a new enter list. Just learn it as a new enter list. Let's start this enter list, my dear. Service provided by way of renting of any motor vehicle designed to carry passenger, where the cost of the fuel is included, in the consideration charge from the service recipient, provided to a body corporate. So a lot of conditions have been filled in over here. Condition number 1, it must be passenger transportation motor vehicle. Condition number 2, fuel cost should have been included into the consideration itself. Condition number 3, you can understand, it must be provided to a body corporate. So a lot of condition inbuilt. Passenger carrying transportation vehicle designed for carrying passenger. Number 2, cost of fuel is included into the consideration. Number 3, provided to a body corporate. 3 conditions are already factored in the nature of supply. And now look at the supplier. Any person other than a body corporate. So any person but other than a body corporate. Here is also a condition factored in, who supplies a service to a body corporate, which you already know recipient must be a body corporate, and does not issue an invoice charging central tax at the rate of 6%. My goodness, that is another condition getting factored in. As good as 5 conditions, if you could see, my dear. Condition number 1, condition number 2, condition number 3, condition number 4 with respect to service provider, and condition number 5 with respect to what type of invoice he can charge, and any body corporate in local authority, that's a normal one. So how to build in this RCM, taking into consideration all the 5 conditions laid down over here, that's going to be a challenge. My dear, let's mitigate this challenge with a small and a beautiful chart in place. And remember, whatever the taxes we are going to talk about, RCM or FCM, these are all applicable only after exemption. You have to keep back of mind. So straight away, my dear, let me help you. After you guys noting down this 5 condition, it's time for us to quickly note down a small chart for this purpose. So let's go ahead, my dear. I'm asking the first question. Is it a motor vehicle other than exempt transaction? This renting of motor vehicle is other than exempt transaction, because we understand when something is exempt, it is outside the equation. you will not be, asked to pay tax. FCM and RCM will not come into picture if it is exempt. So other than exempt, remember, before you read this entry list number, new RCM entry list number 15, complete your reading on other exemption category, chapter number 4, entry list number 22, exemption with respect to renting of motor vehicle. Complete that and then come over here. Why? Those transaction covered in entry list number 22 there in others category is fully exempt. When something is fully exempt, nobody will be asked to pay tax. Will there be any fool in this world? When something is exempt, he will walk up and say, I will pay tax. Nobody will pay tax, my dear. So remember to read that and then come over here, because it is a balancing figure of that. Whatever is covered in 22, it is gone. Poye poche, it is outside the equation. You need not check it out. Other than exempt, you please start asking a question. Is it a motor vehicle designed for transportation of passenger or designed for transportation of goods? Entry list RCM spoke about only passenger. Therefore, goods, if at all you rent out, that must be FCM. If not exempted, that must be FCM. And it is other than exempt only. So therefore, straight away it is FCM. No, sir, it is a transportation of passenger vehicle only. It is let out as a transportation of passenger vehicle. So let me give you an example here. I'll give you a small example straight away. Let us have an example. I have Mr. X who is actually, into the business of renting of bus. And bus, you all can understand, it is a motor vehicle designed for transportation of passenger. And he is letting this on hire. To, let us understand, SRM Travels or SRM Transports, who uses this for transportation of passenger service. Right, my dear? Nevertheless, first one, is it a renting of motor vehicle which is designed for transportation of passenger? Renting of bus? Yes. Condition satisfied. Next one, whether Mr. X includes fuel cost in consideration. So no separate thing. What do you mean by no separate thing? He cannot say per day rent of the vehicle is fixed at 2,500 rupees. In addition to that, for every kilometer you have to give me fuel cost 5 rupee, 10 rupee. This is not acceptable. What Mr. X have to give a modus operandi is that inclusive of fuel cost, this is one consideration you have to serve. So there is no subdivision. The renting of motor vehicle, including all the costs like driver beta, everything, it has to be provided. Most importantly, fuel cost have to be factored in. It has to be included in it. Let's understand fuel cost is also included. Only then we can go for the furtherance. Assume when there is, if it is no, sir, Mr. X separately bifurcates. Renting of motor vehicle, he separately charges. Fuel cost there, separately he goes for the reimbursement. My dear, then the particular transaction of renting of motor vehicle by Mr. X to SRM will be under forward charge mechanism. Remember, right? Okay, let's assume this way. He is including that. He is including that in the consideration itself. He is including that in the consideration itself. Then we ask a question. The service is provided by the provider to whom? Who is being the service provider? Why this question is to be asked? Because remember, third condition is not with respect to the service recipient. I am going with respect to the service provider. Service provider column, specified service provider. What is it? Any person other than a body corporate. So we are asking a question. Such a transportation of bus, which is renting of a bus, where fuel cost is included, who is granting this? Who is granting this on rent to SRM? Mr. X. Is Mr. X a body corporate? Answer. If yes, Mr. I'm sorry, my dear. If the answer is yes, sir, this is not Mr. X. Let me tell you, this is not Mr. X, and we will give you a small change here. We will give X limited. We will say it is X limited. Okay. Now assume instead of X, let us assume instead of X, this transaction example is X. What if Mr. X is Messrs. X Limited? Messrs. X Limited giving the bus on rent to SRM Travels, SRM Transports. My dear, who is the service provider? Body corporate, company, right? So he is already in the organized sector. Let him tax under forward charge mechanism itself. He has a right to charge 6% or 2.5%. That is his option. That is his choice. If conditions are satisfied, he can come to 6%. If he doesn't want to avail few benefits, he can go for 2.5%. That is his choice. Recipient cannot dictate this choice. So when, how RCM will come? Then we are asking, who is the service provider? Service provider is any person other than a body corporate. Mr. X. Any person other than a body corporate. Then we are asking next question. On their outward supply, what is the rate of tax X has opted? X is whom here? Service provider. Other than the body corporate, Mr. X is a service provider. We are asking, Mr. X has opted to pay how much CGST? Because we have just learned he has the right to charge 6% or 2.5%, depends on factors. And here, Mr. X is going to opt. Here, Mr. X is going to opt how much? Mr. X has opted for two probabilities. If he has opted for 6%, what? If he has opted for 2.5%, it's what? My dear, if he has opted for 6%, it is again under forward charge mechanism. One and only if he has opted for 2.5%, then one more question comes in. Now listen carefully. Until this point, 4 conditions are addressed. All the 4 are cumulative conditions. You have to understand that. The last condition is whether recipient is a body corporate located in the taxable territory. And look at that. Check who is the recipient. So, recipient is a body corporate, then only RCM with effect from 31st December. Recipient is other than body corporate, then we understand it is under forward charge mechanism and the rate of tax opted to be 2.5% because he has opted for 2.5%. Right, my dear? So, what is this? Chart helps us to understand. Chart helps us to understand in a very structured manner how we have to go about compliance of 5 conditions for one RCM together. Can a list? You have to keep a list and you need to tick, 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 tick. What is the first one? It must be a motor vehicle designed for transportation of passenger. Number 2, fuel cost has to be included into the consideration. Number 3, service provider must be any person other than a body corporate. Number 4, such service provider should have opted for 2.5%. Number 5, service recipient must be a body corporate. Only when all these 5 conditions are satisfied, then the transaction is under RCM, body corporate, recipient is liable to pay tax. Let us understand. In this example, Mr. X has opted for 2.5% on the outward supply and SRM Travels is a body corporate. Let's assume that means SRM Transports on a reverse charge mechanism will be liable to pay the tax with effect from 31st December. Mark it important. With effect from what day? 31st December 2019. If I am your examiner, to confuse you, I'll throw a question of this way. Will your answer be different if it is on 1st of January instead of 31st December? This is where majority of the people will do a mistake. They know there is an amendment happened, but they will not attach value to with effect date. So I'm your examiner. I'll play a game. That's a foul game, but still I'll prefer to play. Not, my dear, not with an intention to pull your legs down, but to make you guys so strong. I'm saying the statement. I will give all these amendments and say, will your answer be different? In the above question, will your answer be different if it is 1st of Jan? If anybody who is not attaching this, what you will do? You will say, yeah, 31st December before amendment. You might write 1st January after amendment. No. What is the effective date this amendment has brought into the system? 31st December itself. Therefore, the answer you will be writing for such question is no change in the answer. Right, my dear? So you have to be very careful. Sometime examiner plays the role of devil's advocate. Right, my dear? So you have to be careful. So go ahead. That's a beautiful provision for you. Let me present the chart in one liner for you, one page for you, so that if at all anyone. And what is that 6% and 2%? It's not given, but let me introduce the 6% and 2% for you, my dear. And when this renting of motor vehicle person will take 6%, my dear, if he is willing to take credit on his input services and capital goods. Sir, renting of a motor vehicle person, what is that he is going to take credit on, sir? Why not, my dear? He might be, getting the spare parts for his bus, which is inputs. He might be purchasing the capital goods, bus itself. Again, capital goods. He might be taking a lot of repairs and maintenance, insurance service, which is input services. And all these things, like he want to take credit, then he will be charging 6%. No, sir. He doesn't want to take a credit on inputs and capital goods. It is fine if he takes credit only on the input services and only that too on the same line of business. And what do you mean by same line of business? Can he take credit on repairs and maintenance, insurance? No. If he takes bus on hire from someone and he is giving the bus on hire to somebody else, for example, the example we saw now, SRM Travels. Listen carefully. SRM Travels took a bus from Mr. X, and to provide this bus, Mr. X has taken a bus from Mr. Y. To give the bus to SRM Travels, Mr. X has taken a bus on rent from Mr. Y. Now listen, what he received is invert service, renting of a motor vehicle. And why he took it? He took it because he wanted to give bus on renting of motor vehicle again. So if it is in the same line of business, he is allowed to take only credit on this balance. All credit is blocked. He can't take. This is not under ITC provision. This is under rate of tax provision. This is attached. These conditions are attached with the rate column for us. So you have to be mindful. Mark it very, very, very important. Now I'm going to reduce the sheet size, and I'm going to present you the chart in one page, my dear. Requesting all of you to make a quick note of. Go ahead, my dear. And that's renting of motor vehicle for you. Taxable under RCA methodology. I hope and trust you will freeze and you will make use of this, okay? And I hope and trust you can also, make a note of this. So that's the end of the most important and the only amendment in the RCM area. We are going for the next amendment, which is basically in section number 10, part of chapter 3. Section 10 has got 2 amendments. All is mind-blowing. We are going to learn and enjoy one after the other one. So welcome for the next one, my dear. Second amendment in chapter number 3, but most important amendment. This is with respect to composition scheme supply. My dear all, we all have a very good understanding when it comes to composition scheme supply. Section 10, subsection 1 allows any registered person to opt for the composition scheme if they have not crossed the aggregate turnover threshold limit, which will vary as per the notification issued by the government from time to time in the preceding financial year. So in the preceding financial year, when the aggregate turnover does not exceed for any registered person, they are entitled to offer composition scheme. But this is a gross understanding, and this has undergone some changes. Government has understood that any service provider or any person who has been allowed to do the respective task should also be allowed to do some other services, because that's a call of the day. Understanding this particular beautiful provision, Finance Act 2019 has brought in with effect from 1st February 2019 amendment, which you all would have read in May 2020 related amendment paper itself. You would have covered it. Or prior to that amendment itself, you would have covered it. What is that provision? That provision allowed the manufacturer, the service provider who is a supplier of food, and any other person who is entitled to offer composition scheme to provide any services, but restricted to the quantum of 10% or 5 lakh. 10% of turnover of the preceding financial year or 5 lakh, whichever is higher. They restricted the scope. Right? Here is where a relaxation has been placed by the department, which is a welcome note again, which is going to help the industry a lot. Have a look at this provision, my dear. For the purpose of the second proviso, basically, which is talking about any other services to be provided. They say the value of exempt supply of services provided by way of extending loan, deposit loans and advances, and so far as the consideration is represented by way of interest and discount, shall not be taken into account while determining the value of turnover, in a state, or a union territory. This is not to be considered. It has to be excluded. What does it mean? First, let's appreciate by way of visualizing this in a very formatted structure. Let's get into this in a very formatted structure, my dear. These are all the person who has been allowed to do composition scheme option. And I don't want to touch aggregate turnover calculation specified limit because it has not affected. So there is no amendment. Where is the amendment? Sir, amendment is with respect to main service. See, please appreciate this is the principal or main activity. And after carrying out such a main activity, they are allowed to do ancillary or incidental. See, this is the name given by me, not given by the act. So I am putting you under caution. This is a name given by Seetharaman. This is a name given by me, not by the act. I am calling it as incidental ancillary because I find it rightful in doing so. Right? Not necessarily only incidental and ancillary. It can be any services for the examination. For the bookish approach of examination, it can be any service. Have it back of mind. For the practical sake, having seen the field, this is the most important, amendment which has been brought in by the department to address the industry concern. So we are going to take it on the industry wise, why it is being done so. Right? Let us first understand. Sir, I am a manufacturer of goods other than, specified goods under 10(2)(e), which is basically iPad goods, banned goods or sin goods we call in our language. What is that? Ice cream, pan masala, tobacco and aerated waters. So those things, iPad goods, iPad. Ice cream, pan masala, aerated water and tobacco. So that's iPad, small acronym for you to remember. Sir, I am the manufacturer of this. Can I do any other services? Yeah. You are allowed to do any services other than the principal activity. You can allow to do any other services apart from this three. Apart from this three, you can do any other services. But what must be the quantum? 10% of the turnover in a state or union territory. And you all will be asking me, sir, what's this 5 lakhs and 10%? It's the same, right, as we have learned in removal of difficulty order, which is basically an amendment coming into the picture. Correct, my dear. The difference is, previously we had the same provision by virtue of the blessings we received from removal of difficulty order. But this time it is not removal of difficulty order. Act itself got factored and amended, and Act itself now gives an explanation to say this 10% of the turnover in the state limit should not be considered, including that exempt transaction, which is loans and advances, so far as the consideration is considered as interest or discount, which is represented by interest or discount. That has to be explored. Now let's take into picture. Let me take manufacturer into consideration and give you a small example of the manufacturer. Let's assume this manufacturer is operating in Tamil Nadu and he is also operating in Andhra Pradesh, AP. Andhra Pradesh and Tamil Nadu. In Tamil Nadu, he is doing 40 lakhs turnover, and in Andhra Pradesh, he is doing 40 lakhs turnover. Both are manufacturing sector. And in both the cases, he does other services also. Whether he is entitled to do other services? Yes, he is entitled to do other services. Now, law permits it, proviso 2 permits it. But to what extent is a question. Let's take other services. Point number 1, he provides repairs and maintenance to the extent of, 4 lakhs. And point number 2, he provides, let us say, renting of motor vehicles. He provides renting of motor vehicle services as a part of it for 2 lakhs and 2 lakhs, let's say. And then point number 3, he provides something called, he receives interest for loans and advances rendered. Against loans and advances, he takes interest. Let's assume 10 lakhs, similar figure. So what is the aggregate turnover? First, turnover in a state we will calculate. So total turnover in a state or union territory. How much? For the state of Tamil Nadu, it is 50 plus 6 lakhs, it is 56 lakhs turnover. And in case of here, it is also same 56 lakhs. What is the aggregate turnover? Aggregate turnover can be only one turnover, it does not be two. Pulling everything together. Pulling together, we will have something called 112 lakhs here. That's aggregate turnover. Now, keeping this intact, now I have to consider this limit. How to go about for this limit? And for Tamil Nadu and Andhra Pradesh, I have to take it separately. Since both are identical figure, I am taking one into picture. Boss, 10% of the turnover in a state is a maximum permissible. So we need to do what here? See, my dear, for this calculation, you need to arrive at this figure as A and B. And whichever is higher has to be compared with actuals. Now, for this comparison of actual, what I am supposed to do, sir? You are supposed to do it. For this actual comparison, you are supposed to take this 6 lakhs, point number 1. What is the actuals you can take? Because for the purpose of 10% calculation, I am not supposed to consider. My restriction with respect to exempted service has been completely to be ignored, right? So, 10% of the turnover in a state is 56 lakhs. 10% of the turnover in a state is 56 lakhs, of which I should ignore this 10 lakhs. I should ignore this 10 lakhs. That means out of 46 lakhs, 10%. So out of 46 lakhs, how I arrived at 46 lakhs? 56 lakhs less 10 lakhs, meaning thereby it is 46 lakhs. 46 lakhs into 10%, which is basically 4.6 lakhs, or basically rupees 5 lakhs, whichever is higher. So of this A and B, 5 lakhs is higher. Therefore, I should take 5 lakh for the comparison. Maximum other services I should provide is only to the extent of 5 lakhs, whereas I have already provided to the extent of 6 lakhs here. So actual is 6 lakhs, whereas the permissible limit is only 5 lakhs, my dear. Therefore, I have said not to have satisfied the condition. This manufacturer, even though the aggregate turnover has not exceeded just 112 lakhs, it is well below 1.5 crores limit. He is not entitled for composition scheme because he has violated the other services norms in one state. And in one state, a composition scheme supplier becomes ineligible. In all other states, he becomes ineligible. We have learned it properly. Correct, my dear? Okay, if this case, I'll just throw another question. Will your answer be different if the actual is only 4 lakhs? If the actual, let's assume this is case 1. We had a proper discussion for case 1, and case 2, I am imagining. Case 2, I am imagining. Fictitious basis I am bringing in Kanna just for comparison sake. Let us understand and freeze. Actual service I provided is 4 lakhs. And permissible limit is 5 lakhs. Now tell me whether I am eligible for composition scheme. Yes, my dear, you are eligible for composition scheme. Sir, case 3, sir. What is case 3? Sir, actual what I did is 5 lakh. Permissible limit is also 5 lakhs. You are eligible. You are eligible. Comfortable, my dear? Suppose I am changing these nuances and I am saying that permissible limit is not 5 lakhs. Let's understand turnover works around to 96 lakhs. And 96 lakhs, yeah. Let's assume 96 lakhs like 10%. Therefore, 9.6 lakhs. And this is 1.06 lakhs. And see, this is all I'm changing case to case basis. I'm changing case to case basis. Now I'm giving you case 4. In case 4, what are the facts? My dear, first 3 cases, we had different facts. Now I'm coming to case 4, wherein this is 9.6 lakhs. Actuals is only 6 lakhs. And you know 9.6 lakhs or 5 lakhs, whichever is higher. 9.6 lakhs is higher. So 9.6 lakhs is there, but actually I've done only 6 lakhs. Therefore, I'm eligible. So you have to understand and you have to appreciate this permutation combination, whichever is higher is the permissible limit. That is a permissible limit under the law, and that you need to compare with the actual other value of services which are permitted. Now let me give you the logic behind the other services, my dear. A manufacturer in today's era is expected to do repairs and maintenance also. Balance all are for examination sake. I'm just extrapolating and I've given you these facts so that you can calculate that aram se. Right, my dear? Go ahead and knock it down. That's one of the important amendment with respect to the explanation. I hope and trust you are comfortable. So the learning and the confirmation with respect to exemption, the learning and confirmation with respect to explanation is, while calculating 10% of turnover in the state in preceding financial year, you are supposed to exclude interest income. You are supposed to exclude the interest income. Go ahead, my dear. Enjoy. My dear, having covered the amendment with respect to 10 subsection 1, it is time for us to look into a beautiful and a new extraordinary amendment, which is 10 subsection 2A, a new insertion. What is this new insertion? Sir, is there anything new I am going to learn? Answer is no, my dear. You are not going to learn anything new because we all have learned notification number 2/2019. A notification which granted a composition scheme like benefit of concessional rate for anybody who is not entitled to offer composition scheme. It is the same provision, my dear. Instead of notification based concessional rate, now that has been factored in section 10 itself, in 10 subsection 2A, that notification number 2/2019 has been subsumed, and this is exact replica of that provisions. What is that, sir? Any person who is not entitled, for composition scheme under section 10 subsection 1, meaning thereby you are not supposed, if you are a manufacturer of other than specified prohibited goods, you are entitled there itself. That means you are not entitled for 10(2)(a). If you are a supplier of food, you are entitled in 10 subsection 1, you are not entitled over here. And if you are any other person, any other supplier who are entitled to do there, you are entitled under 10 subsection 1, you cannot come over here. When we reconcile all these facts, we get to know it is only who basically into supply of services will be coming into this factor. So why not manufacture of prohibited goods? They are also prohibited here. You can see point number D there. Manufacture of such goods and suppliers such services as may be notified by the government on the recommendation of the council. And here the same notification applies wherein IPAT goods are prohibited. So what is this, sir? Basically, the key provisions what you have to understand here is, my dear, it is entitled for a registered person, basically not eligible to opt to pay tax under section 10 subsection 1. Under 10 subsection 1, whose preceding financial year aggregate turnover in the preceding financial year did not exceed 50 lakhs. If they did not exceed 50 lakhs, they can opt for this, and the maximum rate payable by them is not exceeding 3%. It is a very similar structuring of composition schemes apply under section 10 subsection 1. But what is the most important factor you should appreciate is, this is for basically someone who is not eligible to opt. This is basically for someone who is not eligible to pay tax under 10 subsection 1. That's the most important thing. Meaning thereby, this is a balancing figure. So I should say, a supplier who is entitled for composition scheme. So what is the scope of 10(2)(a)? If at all you want to ask me what is the scope, you define me the scope. My dear, any registered supplier who is entitled to opt under section 10 subsection 1 is not entitled to opt under 10 subsection 2a. Therefore, the balancing figure subject to all other condition is the scope of 10 subsection 2a. The balancing figure is the scope of 10 subsection 2a, meaning thereby, unless you master 10 subsection 1, you cannot apply 10 subsection 2a at all, because whoever is not covered there, they are going to get covered here, but subject to below conditions. What are all the below conditions? Nothing is new, my dear. They are not supposed to make a non-taxable supply of goods and services. There you will see only goods, here goods and services. Everywhere here goods and services will be factored. So this is one additional learning you should have, or services. Everywhere they will add the word or services. They are not supposed to do a transaction of services which is not leviable along with the goods. They are not engaged in interstate outward supply of goods. There, 10 subsection 1, we will have only goods. Here now services is also added, and these conditions are all you can find in 10 subsection 2, right? Very similar to 10 subsection 2. And engaged in making supply of goods or services through electronic commerce operator, meaning thereby somebody is making supply through e-commerce operator. They cannot opt for this 10 subsection 2a. Manufacture of prohibited goods or such services as may be notified by the council. If prohibited, you cannot do. Casual taxable person and non-resident taxable person. It's a new addition which has been drafted in from rules to main section itself. They have drafted in. My dear, and almost one more thing is, if any one person opting for this scheme, all the other distinct person having the same PAN have to opt for this. So all are very similarly structured. But one most important, or I should say two more important thing is, first one, balancing figure. Who will be coming under the scope of 10(2)(a)? Someone who is not entitled for 10(1). Someone who is not entitled for 10(1) will come on 10(2)(a). And what is the rate of tax charged to them? In contrast to 0.5 and 2.5%, here it is going to be 3% under the CGST Act. That means SGST Act 3%. Effective rate of tax is 6% here. Effective rate of tax is 6%. And that's the beautiful, scope in, I should say, notification number 2/2019, which was kept separately outside, Act. They were providing the benefit. Now it has been drafted into the Act, and the Act itself now provides the same. And as a result of this, notification number 2/2019 loses its scope. Right, my dear? In your material, wherever we have written notification number 2/2019, you need to cut that and you should bring this into picture. Right, my dear? Go ahead. That's the latest amendment 10(2)(a). Go ahead, my dear, mark it important, and it effective from 1st January, effective from 1st January 2020, effective from 1st January 2020, mark it important. My dear brothers and sisters, having covered the 3 important amendments in chapter number 3, let us quickly recollect before I am getting into exemptions chapter amendment. Point number 1 is RCM, renting of motor vehicles, has been thoroughly amended. That is why even when I'm giving composition schemes apply, I have taken renting of motor vehicles for, example's sake, just to ensure you're striking that in your mind, registering in your mind that it is exempt. Point number 1. Point number 2, what's the most important thing, sir? 10 subsection 1 explanation, which is not new, and same way 10 subsection 2A, which is already notification number 2/2019 drafted into the scope. So be mindful. We are going to knock down all those. We have completely knocked down all those 3. Now we are going to take up something called exemption chapter. My dear, for your rescue, there is no much amendment except for only one. And in 16th category, in category of exemption number 16, leasing services, entry list number 41 has been amended, and 2 important amendments have happened here. Previously, first let me explain you what is this leasing of industrial plots. Previously, this leasing of industrial plots, which is basically developed by SIDCO, State Industrial Infrastructure Development Corporation, Industrial Development Corporation, or its undertaking. Previously, its undertaking were expected to have 50% control, wherein now 20% control is more than sufficient. With effect from 1st January 2020, this amendment has been brought into this. What is this? Sir, I'll give you an example. Let us understand there is a special purpose vehicle, a company which is formed, which is basically for the purpose of development SIDCO is forming that particular company. And state government, SIDCO, central government, or some other state government, some other unitary, all put together, they own just 25% stake. Balance 75% stake is given to the public or other people are owning. 25% stake is held by all these bodies together, either by SIDCO or SIDCO in combination with central government, state government, or any government. It's more than sufficient. This exemption will apply. Previously, they are required to hold 50% control in the shares. Now, it's not required. 20% is more than sufficient, and this is effective from 1st January 2020. This is the first amendment. So, the government has reduced. And why the government is reducing this? You should understand first. Government currently is in, disinvestment mode. The government is reducing its stake in all the, public sector undertaking as a measure to entertain control over and exemption for these, industries. This has been brought down in line with the current affairs. First, understand that. So, it is not simply changing numbers. It is with purpose to match with the current affairs and match the government's objective of disinvestment. That's this provision. Right, my dear? Right. But the whole objective is a land is developed for industrial development purpose, and sometimes government is not able to ensure this objective. Therefore, 4 proviso has been added, and all the 4 provisos are adding condition one after another to ensure it is used for the desired objective or not. So let's go ahead and check what are all the additional 4 proviso law has brought into the system. These are the beautiful additional 4 provisos, my dear. First one, provided that the lease plan shall be used for the purpose. It shall be used for the purpose for which they are allotted, and that is for industrial and financial activity in an industrial and financial business area. First one is usage. The above exemption of lease land, which is minimum for a period of 30 years, is exempt, and the upfront premium, salami, or whatever the amount you pay as an upfront amount, that is fully exempt, provided it is used for the desired objective. First proviso. Second proviso, whose right is to ensure that you are complying with the desired objective. It's a government, state government concerned shall monitor and enforce the above condition as per the order issued by the state government in this regard. So, who is having given the power to monitor and enforce the above condition? It is the respective state government. It is the respective state government has been given the power. So, first subsection said you have to use it for the desired objective. Use for desired objective is the first condition. That's the first one. What is the second one? Respective state government has the power. Respective state government has been given the power to monitor. Is given the power to monitor and enforce. Is given the power to monitor and enforce such conditions to ensure the objective has been met. Third one. Provided that in case of any violation or subsequent change in the use of land, any violation or change in the use of land, Due to any reason whatsoever, the original lessor, original lessee, as well as the subsequent lessor and or the buyer or the owner shall be jointly and severally liable. They shall be jointly and severally liable to what, sir? To pay such amount of central tax as would have been payable on the upfront amount charged for the long-term lease of the plot from the exemption obtained herein, along with the applicable interest and penalty. My God, along with applicable interest and penalty, the joint and several liability has been fixed. So condition number 3 is that in case of condition violated, in case of condition being violated, please appreciate original lessor, original lessee, lessor, lessee and later parties, and the later party includes any number of end party, all are jointly and severally liable to pay what, sir? To pay point number 1, tax, point number 2, interest, and point number 3, penalty. All the 3, they are jointly, severally liable. All the 3 points, they are jointly and severally liable. That's a big thing. And the last one is again a conservative approach. Provided also that the lease agreement entered into by the original lessor with the original lessee or subsequent lessee or sublessee, as well as the subsequent lease or the sale agreement for the lease or the sale of such plans to subsequent lessor and the owner and buyer shall incorporate all the terms and condition. In fact, all the terms and condition, the fact that the central tax was exempted on the long-term lease of the plot by original lessor to the original lessee, subject to the above condition, and that the parties of the said agreement undertake to comply with the same. My goodness, it's a lengthy one, but look at it in a very short way. You should have a track record. In the new agreement, you should give the complete case history or transaction history, and you should record the original lessor and original lessee, they were enjoyed exemption only by adhering to the conditions. Only adhering to the condition. Sir, why this has to be provided? My dear, this has to be provided because this has to be ensured. Previous point have to be ensured. What is the previous point? In case of any violation of condition, original lessor, original lessee and later party, all are how liable? Jointly and severally liable. If this party details were not mentioned in the agreement, how will you catch up the liability? Therefore, fourth proviso says you have to provide all the details in the agreement, sale agreement or the lease agreement itself. Right, my dear? These are the 4 provisos. All the 4 provisos came into life with effect from 1st January 2020. My dear, I anticipate MCQ in this area. Mark it important. That's the one and only amendment you have in exemption chapter. Go ahead, my dear. Enjoy exemption chapter's amendment. My dear brothers and sisters, since there is no updates, no statutory updates or amendment taken place in value of supply and time of supply chapter as far as the inters is concerned, I am straight away taking you into the most happening area, input tax credit chapter. My dear, a very similar amendment what we have done in November for May 20 examination. It's very similar for that in November as well. How it is similar? 36.4. Rule 36.4 has got amended on 9/10/2019. We learned in May amendment provision, but there we have understood 20% I am eligible with respect to those invoices which are not reflecting, which has not been uploaded in my GSTR 1. So there we understood there is a restriction brought in with respect to whatever, and you all will be mindful about the flow, right? When a supplier files GSTR 1, it comes to the recipient as GSTR 2A. It comes to the recipient as GSTR 2A. And my dear, what does the law says? Unless this GSTR 1 which is filed there reflects it, it will not reflect in your GSTR 2A. If it is not reflected in your GSTR 2A, you are not entitled to take credit because you are supposed to confirm provisionally the reflection in 2A. Upon confirmation, it turns into 2 and it turns into a provisional credit. Later on, it goes on utility test and eligibility test, reversal and so on. And that amount is now subjected to restriction. Now, let me give you an example to make you understand. Sir, my supplier has uploaded all the invoices. That means you're fully eligible. When invoices and debit notes are uploaded in GSTR 1 by the supplier in GSTR 1, I'm fully eligible for the ITC. The problem comes in when he is not uploading. If he is not uploading, previously 20% of whatever is uploaded value or actual figures on this unuploaded value, whichever is less, I am entitled for. So ITC involved on invoices not uploaded or 20% of ITC involved uploaded, whichever is less, I am eligible previously. Now, with effect from 1st January 2020, a significant restriction government has increased, forcing the assessee for compliance and said, Baba, now you are eligible only for 10%. You are not eligible for 20%. So that's a significant amendment. And now, my dear, it will be great if we can go for a small problem, for a small case study to appreciate how this works. So let me take you through to a case study. Come on, my dear. Have a look at this case study. And then we will go for the answer for the same. We will go for the case study and we will go for the answer for the same, right? My dear brothers and sisters, let's have the small illustration and try to solve the answer for this, right? Mr. X has purchased a total 200 transactions during the month of February 2020. That's very important because the amendment came into effect with effect from 1st of January. And we can understand that of which Mr. X has a total ITC of rupees 50 lakhs. And has received all the invoices promptly from the supplier. So, condition laid down in section 16 subsection 2 has been fulfilled. He received the supply and he received invoice also. Can he entitled to take credit? Yes, but subject to this provision. The new 36, rule 36 sub rule 4 lays down a condition. So, we need to check conditions for that. Right, my dear? So, now, Mr. X is therefore is of the view that he is entitled to take full credit. He is entitled to take full credit of 50 lakhs as he is in the possession of invoice and received the supply. Whether he is correct. He is technically correct, but subject to the restrictions now placed by under section 36(4). So we have to check for 36(4), and now independent cases has been given wherein we can apply ourselves for 36(4). Now have a look at case 1. Invoice reflected in GSTR 2A is only 120 invoice. My dear, this number of invoices is matter. We will go back to that later. But look at the corresponding ITC reflected there in GSTR 2A, which is 40 lakhs. That means with respect to invoice reflecting in GSTR 1, only which gets transformed to GSTR 2A, he is fully entitled. So for this 40 lakhs, he is fully entitled. And invoice not reflected is 20 invoices. This proportion doesn't matters. But how much is the value of ITC thereon? This is the actual ITC corresponding to which, invoice is not reflecting. That is 10 lakh. It has to be compared. It has to be compared with 10% of this. Whichever is less, we have to take it. Now, let me present the answer for you in this way, my dear. Yeah. So, once again, let's go for the answer. I would suggest you to present the answer in this way. So, I hope and trust you have to keep the, question back of mind to you guys. And we are discussing case 1. Working note reference has to be given and amount has to be given. With respect to invoices uploaded, you have to write a working note saying that it is fully eligible, fully eligible, and the amount fully eligible is being 40 lakhs. He is entitled for the 40 lakhs. And with respect to invoices not being uploaded, what is the actual eligible ITC available in respect of such invoices not uploaded being 10 lakhs. But it is restricted to point number A. Point number A says what? 10% of the eligible ITC with respect to uploaded. How much is the total value of ITC uploaded? 40 lakhs, of which 10%. So, 10% of ITC of uploaded invoices, 40 lakhs. So, basically 4 lakhs. Whichever is less, he is entitled for that. So, therefore, the total entitlement in case 1 is 44 lakhs. The total entitlement in case 1 is 44 lakhs. Whereas in case 2, can you please solve case 2 by yourself, my dear? Total reflected is 48 lakhs. Totally not reflected is just 2 lakhs. My dear, in case 2, total reflection is 48 lakhs. And what is with respect to actual not reflected, which is 2 lakhs, or we have to compare whichever is less. So, what is less? Basically 10% of what is reflected, which is 48 lakhs, when we take it is 4.8 lakhs. My dear, 4.8 lakhs or 2 lakhs, whichever is less, 2 lakhs is less, therefore he is entitled for 2 lakhs. The total entitlement in second case is going to be 50 lakhs. This is how you have to proceed for this problem, my dear, and mark my words, it's expected area in the examination. Mark it important and enjoy the learning process. Correlate to the answer. Go ahead, my dear. Mark it important. My dear brothers and sisters, welcome to registration chapter relating to amendment areas. And as far as the registration chapter is concerned, there are few important amendments taken place, of which the first one is there is a proviso inserted in subsection 1 of section 22 to enhance a threshold limit for the registration. Whether it is going to have any impact in our learning or with respect to whatever you have already learned, absolutely no. Because it's a ratification process, mind. It's a ratification process. Already this enhancement of limit is in place when we have learned from February 2019 last year, but they have just ratified it. Now look at this carefully. What they say, provided central government at the request of the state and on the recommendation of the council enhances the aggregate turnover of 20 lakh to such amount not exceeding 40 lakhs in case of the supplier who is engaged exclusively into supply of goods subject to such condition and limitation as may be specified. We have already in practice, we are already in practice of enjoying the extended threshold limit by way of a notification limit regarding the same. So as on day, whether this amendment has changed anything, absolutely no. This amendment has not changed anything with respect to whatever you have learned in May. It is going to be the same. So the threshold limit for what, sir? Exclusive supply of services, that is only supply of services, or supplier of goods and supplier of services, both service providers, both suppliers. The threshold limit as far as MMNT, Manipur, Mizoram, Nagaland and Tripura, the threshold limit continues to be only 10 lakhs, and other than the states, the threshold limit is 20 lakhs. So Tamil Nadu, Karnataka, Andhra, all Telangana, all 20 lakhs is a threshold limit. But when it comes to exclusive supply of goods, we already know this provision. So special category states, it's going to be only 10 lakhs. And apart from that, we have no pan-must states wherein Puducherry, Andhra Pradesh, Meghalaya, Uttarakhand, Sikkim and Telangana all will come into picture along with the states. The 6 states, the threshold limit for only supplier of transaction and goods is only 20 lakhs, and all other states, which is other than pan-must states. What is pan-must states? This P, A and N, M, Meghalaya and must. 3 M's we covered, and U stands for Uttarakhand, S stands for Sikkim, 3 stands for Telangana, and last T stands for Tripura. That's actually acronym of PAN must state. So P for Pondicherry, Puducherry, Arunachal Pradesh, Nagaland, Manipur, Mizoram, Meghalaya, Uttarakhand, Sikkim, Tripura and Telangana. This 10 states. Remember this 10 states, my dear. PAN is a 10-letter, alphanumeric code. So PAN must 10-letter acronym for us to remember the states. Whereas in the 4 states only having 10 lakhs and balance all states having 20 lakh. All other states, they are entitled for 40 lakhs. But again, that is also subject to exemption. So nothing new. It's the same learning what you have done, but it has been ratified in the Act itself. Previously, a notification was granting this. Now, Act itself factoring in this particular amendment. So that's a learning for you. Previously, we referred a notification for this. Now, we have to say proviso under section 22 subsection 1 itself grants this power to extend the threshold limit for the only supplier of goods. Exclusive supplier of goods we have to consider into picture, and someone will not be considered. For the purpose of this subsection, he will be excluded from this benefit. So what is that exclusion? We will see. The person who is considered as only for the purpose of this, supply of goods, even though he carries out an activity of loans and advances for which the consideration is interest, he is not supposed to be considered as derailed from that process. He will be considered to be continuing the same process. Let's go for the explanation, which is the second amendment placed in this particular subsection. Look at the explanation, my dear. What it says, for the purpose of this subsection, a person considered to be engaged in the exclusive supply of the goods, even if he is engaged in the exempt supply or service provided by way of extending deposit, loans and advances, and so far as the consideration is represented as a interest and discount. I explain you the impact of this explanation. Let's understand. I am the dealer in pen. Let's understand, I am the dealer of this particular, Rorito pen, and I am doing a turnover of 20 lakhs. I am doing turnover of 20 lakhs, and I am in Tamil Nadu. Let's understand, I am a dealer in Tamil Nadu. In addition to this, I am having, interest income. I am having the interest income close to 5 lakhs. First question is whether I will be entitled for 40 lakh threshold limit. I'll be entitled for 40 lakh threshold limit because I'm also into supply of service. Interest granting of loans and advances, so far as the interest consideration is represented as interest or discount, that's a service. That's an exempt supply. The question is whether I'm entitled for 40 lakhs or not. Answer here is yes, I'm entitled for 40 lakhs. I need not be get restricted by does not exceed 20 lakh provision, because even though I am into this supply of service, which is an exempt supply of service, explanation grants me a proviso to say, explanation grants me a thread, extended thread to say this particular exclusive supply of service should not be considered. And even if it is done, I am entitled to be treated as exclusive dealer of goods. I am treated to be treated as what? Exclusive dealer of goods. Therefore, I should be allowed to go for this 40 lakhs threshold limit. Are you all with me, my dear? Will the answer be different if it is 26 lakhs? Absolutely no, my dear. Here is also you can defend yourself, because explanation very clearly says exclusive supply of goods, even if he is engaged in the exempt supply of services provided by way of extending loans and advances, so far as the consideration is represented entered as discount, I am entitled to be treated as exclusive dealer of goods, and therefore I am entitled for 40 lakhs since I am in Tamil Nadu. Tamil Nadu is not pan master state, and assume this is a pen, so not prohibited goods. So I am supposed to satisfy all the conditions laid down there. I am entitled for exemption of 40 lakhs. Are you all with me, my dear? So thus, just this has been ignored. Just this has been ignored for the purpose of calculation limit. Right, my dear? That's the impact of this explanation. And let's go for the next one, which is Aadhaar Validation. A very, very beautiful, amendment which has been brought in. The next amendment which has been brought in by the Finance Act, by amending all the provisions and brought to effect with effect from 1st of January 2020, but procedures were specified on 23rd of March, effective from 1st of April, but still it is not yet implemented. Practically it is not updated in the system, but theoretically it is relevant for the examination because it is all effective. Right, my dear? Now, let's have a look at, I split this category of person because there are various sub-rules. 6A for the existing registered person, 6B for a newly registered person being individual, 6C for a newly registered person other than individual, 6D basically for whom Aadhaar authentication is not required as notified by the government as a special category of the person. All these things we have to read with respect to notification number 16, 17, 18, 19, all giving effective date and procedure for that purpose. So consolidated learning of these 8 amendments I have presented here, my dear. So you have to be at your best of concentration to grasp this. Right, my dear? Let me take with the registered person. Registered person have to, every registered person and their authorized signatory have to link their Aadhaar to the, their GST-IN by submitting the proof of their Aadhaar existence, failing which their registration will be cancelled. This is the first one with respect to already registered person. So what if they fail to, comply with the Aadhaar requirement as they say? No, the law says their registration will be treated as invalid and they will be treated as unregistered person. Right? But you have to understand, what if I am not having Aadhaar, I have not allotted Aadhaar? Straight away this punishment is too much, right? So this punishment is subject to one more waiver clause, which we will discuss later. Now let's come to the other person, newly applying person being individual. Let's take up 2 more new classes. Newly applying person. First, for a registered person, what does law say? You have to do it within the specified number of days. If not, your registration will be considered as invalid. You will be considered as an unregistered person. This is for a registered person, already registered person. And now, my dear, it is time for us to check out for newly applying person being individual. Newly applying person being individual, it is mandatory for him to go for Aadhaar. If Aadhaar is not there, he is having some other different procedures. We will see that later. But one and only if he goes for Aadhaar submission, he will be allowed to submit part B. But if he is not submitting this Aadhaar validation, then a separate procedure has been laid down. Physical verification procedures have been amended now. So have it back of mind. So only if he undergoes Aadhaar authentication or furnishes proof of processing an Aadhaar, he can proceed. If not, alternate procedures are allowed for him. And in case of others, other person being any of these fellows, they should also furnish Aadhaar. If Aadhaar is not furnished, they have to follow something given in note 1 and note 2 simultaneously. Aadhaar is not furnished, what they are supposed to do? So that means it's very simple. Apart from individual and any other specified person who is basically these two fellow, newly applying person being individual and specified person like Karta, HUF, AOB, all the registered signatory, authorized signatory, they are supposed to do the Aadhaar authentication. What if they don't have the Aadhaar authentication? That's the next learning. If they don't possess Aadhaar, what is the remedy for them? Whether government have to press their neck saying that if Aadhaar is not there, I will not give you registration? No, my dear. Let's check. Where the person or the class of person have not been assigned, they have not been assigned with Aadhaar number, then such person shall be offered alternative and viable means. Law have to notify what is the alternate identification proof they have to submit and within what time limit they have to do. And once it is recommended by the council, government shall specify what is that alternate proof, within how many days they have to submit the same, and then these guys have to submit. Therefore, first understand what government initially came out at and what they ended up with. Government wanted to make Aadhaar a mandatory, but now they ended up saying it is optional. Right, my dear? What if the optional? They have to give the alternate means. This is principle of natural justice. So they have to, do this. Right. And further, the government on the recommendation of the council shall specify the class of person for whom the provision is not required to be complied. That is 6D along with the explanation for you. So who are all the person who is not entitled for, carrying Aadhaar? Any person other than these person. Look at this. The person who is not a citizen of India, he is not supposed to have Aadhaar. A class of person other than the following class of person, namely, other than the following class, you should understand, other than the following class of person. The class of person other than the following class of person, meaning thereby this 4 class of person required to possess Aadhaar. Other than this 4 category of person, who will be central government, state government, union territory, NGO, trust, all these people, they will not be required to submit Aadhaar. So that's most important learning, my dear. Mark this one important for MCQ. They might be testing you here for MCQ. And the above procedure, if Aadhaar is not there, this provision, and I would say this is for MCQ, and this one, if Aadhaar is not there, proper officer says registration shall not be carried out for the person or applicant. Is it fair enough? Is it just enough in the eyes of law? So this I am expecting a theory question. There is a probability that this will be a theory question and this will be an MCQ for you. My dear, mark out for these 4 people are mandatory to have Aadhaar, and other than this 4 people, it is not mandatory to have Aadhaar. Right, my dear? So that's all with respect to Aadhaar, and which is effective from 1st April 2020. Even though this is all made mandatory, this is not made effective procedural wise. It has been made procedural wise only from 1/4/2020. You should be mindful about that, my dear. You should be mindful about that. And now let's come into next amendment, which is to procedure rule number 9 for the grant of registration. See, just now we concluded Aadhaar authentication is mandatory. If it is not there, what is the procedure they have to follow? My dear, rule 9 read with rule 25, there is a change in procedures which has been incorporated. Now, let me explain you why Aadhaar was said mandatory. See, Aadhaar is a biogeographical proof of a person. Biometric plus geographical background of a person, from where you are and who are you. That's a background about as such as who you are and where are you from. And if that proof is available, the government is on ease. They understand that you have a proper backup, absolutely not an issue. But if you are not presenting that, then it is a case of concern for the government. Because where government will locate you? You remember, please, the location of the supplier definition, my dear. Location of the supplier means first the registered place, and next, if the registered place is not available, fixed establishment. If that is also not available, usual place of business, usual place of residence. My dear, when Aadhaar is not there, how I will catch up with the usual place of residence? So there will be a lot of fly-by-night operator who can explore this provision, and that is why Aadhaar was made mandatory. So when a person makes an application for registration without Aadhaar, please understand, government will exhibit extraordinary caution. So what they say, government says, immediately they shall not be granted with registration. Registration will be granted within 60 days, not later than 60 days from the date of application, one and only after physical verification of the principal place of business proposed. Only after, look at this word, only after the physical verification is concerned. We want to confirm that you are there. Only by doing the physical verification. Okay, can I do the physical verification without the assessees present? No. The applicant presence is also must. So a proper officer shall grant the registration after completing, right? This is an amendment. Previously, physical verification can be done only after registration. Now, before registration, to grant the registration itself, they will come for the physical verification, and only after completing the physical verification of the principal place of business in the presence of the said person, that too they have to carry out within 60 days. And then they have to, grant you registration. And if they conduct such physical verification, this is the last procedure amended. Physical verification procedures have got amended. If they conduct such physical verification, what are all the situation? My dear, this is a change in scope. Earlier, physical verification can be conducted only after registration is granted. Now, due to Aadhaar failure authentication, before grant of registration they can do, or after grant of registration for any reason after grant of registration, they can do the physical verification. But if the moment they go for the physical verification, what is the complaints they should do? A verification report in Form GST REG 30 has to be uploaded within 15 working days along with photograph, including photography evidence and other documents. They have to upload in online, wherein it will be available for both the registered person and others. It has to be made available. My dear, amendment in Rule 25 has been brought with effect from 23rd March 2020 to incorporate Aadhaar provisions. And if you remember, Aadhaar authentication is also made mandatory with this notification with effect from 1/4. So this is the impact of this. So what if Aadhaar is not given, not authenticated by an applicant in parte? Very simple. Proper officer shall come and do the physical verification. He shall upload the report, and after that he will grant the registration within 60 days. So Rule 25 and Rule 9, you have to connect and read together to make maximum out of it. Enjoy. That's our last amendment in registration chapter. My dear, there are 4 amendments, of which 3 is connected to Aadhaar. Right, my dear? 1 and 2. I would say 2. Only one amendment with respect to, aggregate turnover or the threshold limit, exemption, and balance are with respect to Aadhaar authentication. Mark it very, very important, my dear. Go ahead, enjoy, expect a theoretical question and MCQ in this area, and I will expect one more physical verification related question also, either as an MCQ or as a main question itself. What is when a proper officer can do a physical verification of the business premises? Or Mr. X says physical verification can be carried out in his business premises one and only when registration is granted by the department. Validate the statement. Like this, there can be a probable theory question. My dear all, mark it important. My dear brothers and sisters, having completed the procedure with respect to registration chapter, where we have seen beautiful amendments, and now it's time for us to take up 3 important amendments in Tax Invoice, Debit Note, Credit Note chapter. Right, my dear? And now let's have a look at this particular Finance Act number 2, 2019. They have inserted section 31A, which is one more thing, which section has specified. The Act has brought this into effect with effect from 1st of January 2020, but till date government has not specified the class of person or its effectiveness or its modus operandi. So therefore, relatively speaking, and the reality factor is that this section remains in ineffective state. So what is this section is all about? Government, on the recommendation of the council, prescribe a class of registered person who shall provide the modes of electronic payment to the recipient of the supply of the goods and services are both made by him, and give him an option to such recipient to make the payment accordingly. And they have to give an option to make the payment accordingly. Nothing but E option, electronic payment option, has to be enabled to the recipient as per this particular section. But till date, no class of registered person, you have to see prescribed. So no class of registered person has been prescribed till date, and no prescribed mode of electronic payment has also been prescribed till date. So this section is likely to come into effect only in the future when the government notifies the same. So as far as the exam is concerned, just learn facility for digital payment has to be informed to the recipient as per new section 31A. There is nothing great, because until something gets practically implemented, you will not have what you can't really measure its impact. So that's how a section which has been notified but not yet made practical. Right, my dear? 31A for you. And let's move forward to Rule 46. Rule 46 is also a similar one. I'm crossing my fingers when I'm teaching you QR code and also e-invoicing provision. So why I'm crossing my fingers, it's very simple. This was originally effective from 1/4/2020, and later on, because of the COVID pandemic and all those stuffs, it has been postponed. Effective date has been postponed by way of another notification to 110. But I'm not sure, because as on day when I'm taking this session for you all, CA Institute has not published the statutory update. You have to be back of mind. Right, my dear? So I'm crossing my fingers. And if at all CA Institute notifies this as a relevant amendment taking 1/4/2020 notification into consideration, learn it. If that not be the case, if they are ignoring this and saying that this is applicable for the future, be at bliss, you learn something regarding the future which is not relevant for your exam. I wish and sincerely pray this November examination is the one and the last examination you are appearing. So for you, it's not required. But practically, you might have to see in your articleship. Have it back of mind. Right, my dear? Now, okay, come to this QR code. What is this? My dear all, you all have to understand section 31 read with rule 46. It talks about content of a tax invoice, wherein already we know 16 items, A to Q has been listed. 16 line items has been mentioned there as a requirement. Now, one more line item is added, which is QR code, and this is applicable to an assessee whose aggregate turnover in a financial year exceeds 500 crore rupees. If it exceeds 500 crore rupees for such an assessee, when they provide supply to an unregistered person, it is mandatory to mention QR code in the invoice, and this is also mandatory. This is also mandatory for Aadhars, Online Information Database Access Retrieval Service Provider. For him also, this is mandatory. But even though somebody crosses 500 crores, crores as they specified, but for them this QR code is not mandatory. Who are those exceptional fellows? My dear, MCQ or important question, for whom and all QR code is not mandatory. These four people, basically insurer, banking company, financial institutions including NBFCs, GTA, passenger transportation service, and exhibition of the film in cinematography film, admission to exhibition of cinematography film in multiplex screens. All these four people are somebody who is covered under Rule 54 for alternate documentation, which is in place of invoice, they can issue any other document which will be deemed to be tax invoice. So these are special category people who are dealing with a large sector of B2C transactions mostly. So for them, an exception has been granted from this QR code. But as far as this Aadhars and other people who crosses 500 crores, apart from these four people, anybody who crosses the aggregate turnover in a financial year of 500 crores, they are mandated to give QR code practically with effect from 110 and theoretically with effect from 1/4/2020. Please understand, they can also give dynamic QR codes. They can also give dynamic QR codes, and all this QR code will be coming into picture only when they make a supply to an unregistered person, not to a registered person. This is here and after referred to as B2C. B2C invoice mandates. So B2B invoice does not mandate QR code. B2C transaction requires QR code, which is quick response code. And if at all any payment is going to be done online, because it's a COVID season, everything is getting online, and even classes are getting completely online. If that be the case, even this QR code invoice printing should also done online through dynamic QR codes. because I can't have this QR code is like barcode. I can't have the barcode for all the shirts to be same because people will cheat me then. So I must have a different barcode numbers for every product, right? The same way, this QR code has to be different for every product and every invoice you generate. Therefore, for every invoice, there must be a dynamic QR code. If you're doing it in online, has to be generated. And more importantly, if you do for the dynamic online QR code, this dynamic QR code reference has to be linked to the payment. So the conditions is, if you're making more than 500 crores other than these 4 categories of the people, or your online information database access retrieval service provider providing service to an unregistered person, basically B2C transaction, for you raising an invoice, QR code becomes mandatory. Can you give an online dynamic QR code? Yes, but provided you have to link this dynamic QR code to the payment reference. For every dynamic QR code reference, if the payment is linked, then the dynamic QR code is deemed to be the QR code. Right, my dear? That's a most beautiful, provision number 2. Provision number 2 with respect to dynamic QR codes, as you could see. Please go through and, confirm its understanding in peace and conformity. And the last one is manner of issuing. Rule 48, manner of issuing invoice in case of large supplier. Let's get into this beautiful provision, my dear. Let's get into this beautiful provision. Manner of issuing invoice. Manner of issuing invoice for the notified category of person. Who is that notified category of person? My dear, whose aggregate turnover, as you could see, whose aggregate turnover in a financial year exceeds, 100 crore rupees. And again, note 1 is mentioned. Note 1 is nothing but same 4 category of person to whom this will not be applicable. So the same 4 exceptional category of QR code people, the same 4 category of the people is excluded from the e-invoicing provision also. So what if other than that 4 category, let us have a quick look. You can see the note 1 here. Registered person whose aggregate turnover in a financial year exceeds 100 crore. As a class of registered person who shall prepare invoice and prescribe the document as per Rule 48 Sub-Rule 4, which is basically the new provision. However, such registered person excludes, specifically excludes. You can see insurer, banking company, financial institution, NBFC, goods transport agency, and then below that you can see there passenger transportation service and service by admission to exhibition of cinematography films in multiplex trade. The same 4 category of the person who has been exempted or excluded from the QR code. It is the same 4 category of the person who has been exempted from e-invoicing provision also. My dear, apart from this 4 category, any other person whose aggregate turnover exceeds, let me fix it first. Yeah. Whose aggregate turnover exceeds in a financial year 100 crores. Whose aggregate turnover exceeds 100 crores. For them, it is mandatory to prepare the invoice in form GST INV 01, and after doing it, they have to take the invoice reference number. And from this, and where they have to take this invoice reference from, remember, they have to take it from the Common Goods and Service Tax electronic portal. There is a new portal created. There are 10 portals created for this purpose by the department, and this will get auto-updated in GSTR1. Automatically, this will get auto-updated in GSTR1. And what are all the portals using which they have to do? And more importantly, if they are taking this electronic invoice, the multiple invoice issuing obligation, which was previously for the goods and services, has been abolished, meaning thereby one e-invoice is more than sufficient. They need not issue multiple copies. It is getting updated in the portal automatically. What is that portal? How many portals are there? My dear, please have a look at this. We have a common portal in www.einvoice1gst.gov.in, starting from e-invoice 1 to e-invoice 10. There are 10 portals here. And now, my dear, once you actually generate GST INV 01 using this portal and create an invoice encryption, invoice reference number, once you create it, your GSTR1 automatically gets updated for that particular information. So this provision also, I'm crossing my fingers. E-invoice also, I'm crossing my fingers. Why, my dear? Because as I already told you, this is also very similar. Originally, this was supposed to have come from 1st of April. Now, because of the pandemic and non-application, non-compliance and global lockdown situation, government has decided to push this compliance to a later extent. So, with effect from 110, it has been practically, this was made effective from 110-2020. But fingers crossed, only when ICA comes with statutory update, we can get to know. So, this updates are as on day when I'm presenting you this is a situation. ICA has not given as on day, ICA has not given the statutory updates, my dear. So, you can go ahead to, assume ICA will mention. If ICA mentions, go ahead to enjoy this learning. If not, leave it. Nothing wrong by learning something new. Right, my dear? So that's with respect to e-invoice and QR code. So now have it back of mind. 3 provisions we have learned in tax invoice, debit note, credit note chapter, of which the first point is alone effective, and the first point is nothing but section 31A. We understood that has been effectively notified but not operationalized, and balance 2 amendments are not yet practically done, but it is notified. So all the 3 amendments is like, government have to act upon in the future. So mark this 3 amendments for to be cross-verified and confirmed with ICA statutory update. All the 3 only when reflects in ICA statutory update you should learn. As a practitioner, it's my endeavor to present all the changes, and whatever is relevant, you please take it. But if it is not mentioned, don't get disappointed. You learned practically something for your articleship. Right, my dear? Go ahead, enjoy. I'm going to take you through for the 9th chapter, which is basically payment of taxes. Mark payment of taxes this time, very, very important, because very, very, very important amendments have happened in payment of tax chapter. And it's very, very eventual as well. We are going to discuss those areas. Welcome to payment of tax. So, my dear brothers and sisters, let's get back to chapter number 9, which is payment of tax. As I told you, there are 3 important, amendments which you are going to see here, of which the first and foremost thing, which is most important welcome sign during this COVID liquidity affected period by the department towards the trade and industry, is this courteous grant, I should say. Erroneous tax wrongly paid electronic cash transfer balance. That is to say, basically, we all know previously, cash deposit made in the electronic cash ledger to the specific head cannot be used for any other head or any other even interhead inside that particular head. For example, if I have deposited tax, I have to use it only for the tax. Say for example, I have deposited for CGST tax. I can't use it for CGST interest, liability, penalty, nothing I could use. I could use only for the CGST tax. If at all wrongly I have paid, the only remedy which is pronounced in the law is taking a refund, which is going to obviously consume the time and preventing the assessee from using his own liquid fund which is available in the electronic cash ledger. Just to put a full stop for this harassment, government has come out with a beautiful term with effect from 21st of April. They have made it active itself. So it is practically now possible by filing a form GSTPMT09 for transferring the electronic cash balance in one ledger, one head to another head of whatever be the interhead it is possible you can transfer. So that's a beautiful provision with respect to this. As far as this amendment is concerned, the transfer of balance in electronic cash ledger from one head to another head, now it is possible. The possibility has been made. This transaction has been made feasible by amending 4910 and 49 subsection 11 along with section 53A, a new section which has been brought into the system. 4910 and 4911 from the assessee perspective and 53A from the department perspective, how department is going to cope up with CGST and SGST inter-transfers between them if the funds are transferred. Now have a look at this, my dear. Upon filing the amount, the moment this refund has been filed, what is actually deemed as 2 things has been deemed to be done. For example, I'll give you a small example here. CGST tax has been transferred to SGST tax or SGST interest. Point number 1, it is deemed that CGST tax has been applied for refund and is granted, and cash deposit has been made in SGST tax. So from where I am getting transferred, it is deemed to be refunded there. And from where I am getting it transferred, to which account I am getting transferred, the destination account, there it is deemed to have been deposited. That's a beautiful provision as far as the assessee is concerned. And now I am placing a small question for you. Whether Mr. X, who is having excess balance in the electronic cash ledger of CGST, can he transfer to other major or minor heads to settle his liability in the other heads? What is the answer, my dear, with this provision? Now, answer is yes. He can transfer the fund. And what will be the likely impact? Let's have the impact study from the hands of Mr. X for this particular amendment. The impact from the hands of Mr. X is going to be like this. Upon filing the CGST tax, it is deemed to have been refunded, and the destination wherever he is transferred, it is deemed to have been deposited. And that's from the assessee perspective. From the department perspective, if you take a deeper look from the department perspective, sir, CGST tax is transferred to CGST and IGST. Basically, CGST, IGST are central government governed funds. So there is no need to transfer the funds. But when the CGST tax is transferred to SGST or UTGST heads or any other minor heads, then central government has to correspondingly transfer that fund to the state government and vice versa. If state government transfers to any of the central government and state government, then state government has to transfer the fund to the central government, and state government major head to state government or UTGST minor head, which is obviously mutually exclusive transaction. You could understand for a particular state or union territory, only SG or UTGST will apply. Both will not apply. So in that be the case, where say for example Andaman and Nicobar Islands, where UTGST is applicable and they have to adjust UTGST tax wrongly paid to UTGST late fee or UTGST interest, they can do. In that situation, no need to transfer anything. Had it been Tamil Nadu, SGST tax will be transferred to SGST interest or SGST late fee or SGST penalty, nothing will get transferred. But SGST amount from Tamil Nadu want to be adjusted against the CGST tax, then Tamil Nadu state government has to transfer the fund from their kitty to the central government kitty. They have to park. So this is the impact from the hands of the department. But this is a very, very beautiful and the most welcome remedy as far as the trade and industry is concerned, because one thing which in this liquidity affected period going to help them to ease off the pressure on the liquidity, right, my dear? That's entry list. That's amendment to section 49 subsection 10 and 11, and a new entry list 50 new service section 53A for the department perspective. Go ahead to make a note of this, my dear. We are going for the next one. What is the next one? Your formalization, not that great important, but simply a procedural. Previously, we have learned that the moment ITC or cash refund has rejected, the fund will get automatically transferred back to the electronic cash ledger and electronic credit ledger. It is as good that my money is with you. The moment I issue a check or the moment I apply for the refund, you get it, I come and draw a DD from my bank account. Obviously, it's going to be get deducted. My balance will come down. But later on, we get to know that DD is invalid because of some technical errors. The fund will get redeposited in the account. Same logic here, but this time it is formulated. This transaction has been formalized, I should say, with a form called PMT03. The form called PMT03. The moment now refund of ITC and refund of cash is getting rejected, proper officer is expected to pass in order GST PMT03. Upon passing of this order, amounts of GST gets automatically recredited in the electronic cash ledger and electronic credit ledger. That's amendment with respect to Rule 86 Sub-Rule 4A. And what we are experiencing next is a wonderful new provision with respect to Rule 86A, which got inserted with effect from 26/12/2020. One more measure taken by the government to prevent illegal or inappropriate credit being enjoyed in this crisis time. What is that? My dear, we all know that any credit reflects in the electronic credit ledger, we are allowed to use in the order prescribed. And what order? First IGST, then CGST, then SGST. In this order, we are allowed to adjust these credits. But that's called as utilization of credit. What if the credits are not utilized? You can apply it for a refund. Unutilized credit can be taken for a refund purpose. These are the only two utilities of ITC. Either you adjust against a liability or you apply for the refund. When this too is said to be the utility of the ITC, proper officer can block this to utility. He can block this to utility by placing a conditions and by placing a restriction on this, and such restriction will be valid for a period of 1 year from the date of imposition, and in between proper officer finds it's inappropriate, he can revoke that particular restriction. And most importantly, what we have to learn is why such restriction can be imposed. Is there a probability? Why such restriction has been imposed by the proper officer? Is he having the ground to believe? Answer is yes. Very beautifully, Rule 86A demonstrates the same. And look at this, my dear. Commissioner or any other authorized officer by him on this behalf, not below the rank of assistant commissioner, having reason to believe, they have reason to believe that credit of input tax credit available in the electronic credit ledger has been fraudulently availed or ineligible credits have been availed, and for the reasons recorded in writing, they may not allow the utilization or the adjustment, because we know first utilization is a debit against a liability and second utilization is refund. They can block both, and this is valid. The moment they get to know after the proceeding this is not fair to block, they can allow, and anyhow if they have not blocked, it will automatically get revoked after 1 year. But remember, what is the reason? What is the reason to prohibit the credit? This is the most important learning. There are 5 reasons collectively pronounced in the law. There are 5 reasons pronounced in the law collectively, my dear. All makes a lot of sense. All make a lot of sense towards compliance. So the mantra is going to remain simple in the future. Either you comply or you don't take credit. What are the compliance? What are the reasons to be believed that it is fraudulently taken or ineligible credit is availed? Let's go ahead to enjoy, my dear. Issued. What is that? The reason to prohibit utilization of credit. The credit of the input tax has been availed on the strength of tax invoice and debit note or any other document prescribed under Rule 36. Issued by person who has found non-existence. Person who has found non-existence. Meaning thereby I am having the supply. Let's understand. I'll give you a demonstration. Seetharaman is being a recipient, purchased goods from Shogun, and Shogun is not traceable anywhere. Shogun claims he is a registered person, GSTR1, everything is done, but when the proper officer goes out and have a look out for Shogun, Shogun is nowhere there. So, not found in existence. Or Shogun is not conducting the business from where he is registered. He has filed promptly GSTR1 and proper officer goes to the particular place, because after registration for any purpose, proper officer think he can go for the physical verification. Proper officer goes to the physical verification only to find out that no business is carried out from the principal place of business mentioned in the registration certificate. That means also my credit, Seetharaman's credit, can be brought. For the supplier's default, recipient, I have to pay a price. Now, point number 2. Without receipt of goods and services, I have taken credit. I, the Seetharaman recipient, has not received any goods or services from Shogun, but I have taken only the bill. This is called as a very popular method of bill trading. So if this is carried out, proper officer identifies, then he can block the credit. He can block the utility of the credit. Third point, in respect of any supply, the tax charged in respect which has not been paid to the government. Wonderful. Now listen carefully. Shogun being the supplier, he supplies the goods to me and I am being the recipient. I promptly pay the value of goods and tax to Shogun. Shogun took the tax and went for honeymoon. He never paid it. Right, my dear? Or he went somewhere to Rome, enjoying the life, partying with the friends, not paid the tax. Government finally identified no tax it has collected through Shogun, which is acha, I am eligible to take credit. So government can block. So meaning thereby, if the supplier is not complying with the law, recipient have to pay the price. And these are all nothing new. These are all already spelt in section 16, read with Rule 36. Again, they are reiterating here. Now, next point is, the registered person availing the credit of input tax credit has found non-existence and not conducting business in the place. Oh my goodness, it's me. Proper officer comes for the verification wherein he could not find me in my registered place. Or he finds in that registered place, I don't do any business. He can block the credit. This time the defaulter is recipient. He can block the credit. And last one, the registered person availing any credit on the input tax, not in possession of the tax invoice or debit note or any other document prescribed under Rule 36. My goodness. I lost the invoice. My dear, we have very clearly learned when the invoice is lost, credit is also lost. Correct, my dear? So having understood this, these are all the restrictions, these are all the reasons believing which proper officer can block the utilization of the credit. He will not block the eligibility of the credit, he will block the utility of the credit. You can't use it for the period of 1 year if he has not revoked any time before that. And that's a beautiful provision for you, which is Rule 86A, which is Rule 86A. Proper officer is now entitled to block the credit utilization. Department under section 17(5) gives you the provision to block the credit, whereas here 86A allows the proper officer to block utilization of the credit. And that's the 3 important amendment in this chapter called payment. So therefore, my dear brothers and sisters, we have come to the last leg of this amendment, which is basically registration returns chapter. But before I proceed to return chapter, let's quickly consolidate. Point number 1, the most important and the favored amendment is transfer of electronic cash balance from one head to any interhead. Second one is, once refund is rejected, PMT 03 have to be passed. It might be 86(4)A, might be an MCQ. And then the most important and the restrictive condition placed to prohibit the credit on the reason to believe that there is a fraud or ineligible availment of credit, proper officer can pass an order in writing and he can prohibit the utilization of credit. That's chapter number 9, amendments in payment chapter. My dear brothers and sisters, let us go ahead to enjoy the last but not the least chapter, returns, the 10th chapter. Welcome to the 10th chapter amendment, my dear. There are 4 important amendments took place during this phase, and we are going to make a note of all the 4 amendments. All the 4 eventually are associated with annual returns. That's a beauty of this particular chapter. There are 4 amendments. All the 4 amendments are pertaining only to annual returns. And here is where I have to reiterate what I said. Please remember, any provision with respect to extension of returns which has actually been given due to COVID is not applicable for the examination as given by ICAI's latest clarification. Therefore, we are ignoring all such extension of due dates. Okay. Now, coming back to the mainstream, what are the other constructive amendments happened in annual return? Point number 1, power to extend the due date of annual return has been given as a proviso to section 44. Using this, now a proviso has been placed, power has been given to the commissioner to extend the due date of annual return. And one more further proviso is placed, which is basically, or an explanation nature, which is basically, if CGST, if the commissioner placed in the State Act or UTGST Act passes an extension order, that squarely applies to CGST also. That's what the beautiful amendment. And the due date for the annual return extended, that's what the next one. Due date for annual return extended under the SGST or UTGST is deemed to have been extended under the CGST also, And we have point number 3, which is annual turnover. That's a specific and extremely specific entry list, my dear. What is a specific entry list? Specific amendment, I should say. What is that? Aggregate turnover for the GST audit limit for the year 2018 and 19 alone has been increased to 5 crore. My dear, we have learned this so many times. First, the law said the aggregate turnover must be 1 crore. And later on, through notification, they extended it to 2 crore. And they said below 2 crore, it is optional. So here, one more time, they have made below 5 crore as optional. And that's applicable only for financial year 2018 and 19. And finally, for a foreign airline company, relaxation has been given from filing the reconciliation statement. And instead of reconciliation statement, it is fair enough if they file all their respective distinct entities, receipts and payments state-wise and GST invoice if they submit. That's absolutely fine enough for them. So let us see where this all having the respective impact. First one, power to extend the due date. My dear, as you could see, what happened here is, and first one, power to extend the due date comes later on. Let's first see this particular provision. Aggregate turnover, electronic form for annual return is GSTR 9 and 9C, we know that. And look at this, my dear. Only for the financial year 18-19. See, in any financial year except 18-19, it is 2 crore or more. That is to say 2019, 20, 2021 as on day, no provision has been set, so we assume the same 2 crores is the limit there. But for the financial year 18 and 19, it has been notified that the limit is only 5 crores or more. We are supposed to do the GSTR audit, which is 9 and 9C, along with audited financials and reconciliation statements we have to file, and wherein only for the reconciliation statement, foreign airline has been given as an exception. So what is this exception is all about? And before I proceed anyone, let's first complete the foreign airline, exception. Look at this foreign airline company. My dear, mark this important. It can be tested in an MCQ. A foreign airline company shall not be required to furnish reconciliation. You have to understand, they have to submit form GSTR 9C. They have to submit form 9 and 9C, but in that there is no need for a reconciliation statement. Instead of the reconciliation statement, they can submit the statement of receipts and payments, which is duly authenticated, certificate which is duly authenticated by the chartered accountant in India who is into the practice. It should be submitted for each GSTIN on or before September of the succeeding financial year, on or before 30th of the succeeding financial year. That is to say, my dear, let us understand, financial year 2019-20, for this financial year, they are obligated to file on or before 30/9/2020. This is a due date within which they have to submit what? They have to submit their receipts and payments with respect to Indian business duly certified by the chartered accountant with respect to each GSTN. They have to submit on or before 30th of respective year following the financial year. If they does this, it's sufficient. They need not submit the reconciliation statement. This is a special waiver given to a foreign airline company. And before that, as I told you, the commissioner has been given the power, and we have discussed this also. Commissioner, on the recommendation of the council, he can actually extend the due date of the GST annual return, and if the CGST commissioner is also extended, if the CGST commissioner extends the same, it is deemed that it is also extended under the SGST, and if the SGST commissioner extends, it is deemed to be extended under CGST as well. That's the flow and the end of this beautiful chapter, my dear. Now listen carefully, a quick run through. 19 exemptions, 19 amendments which have effectively taken place, and I have tried to consolidate all those things. And I want to give a small disclaimer for this, my dear. This effort I am making to make you guys all updated and get prepared for the examination hands-on, because I understand majority of my brothers and sisters who prepared for the May, you guys were sitting and extending your preparation for November. And some of my repeated brothers and sisters who prepared with wholehearted effort for May, for you guys also, this benefit have to come and reach at the earliest point of time. So what I've done, I consolidated without waiting for the ICAI statutory update. I consolidated all these aspects, and now I am giving it to you, my dear brothers and sisters. Please use optimum. Let's all be in blissful, and let's all have a happy learning. Wishing you all a very, very, very happy learning. As your brother, I'm always available for any support at any point of time. Wishing you all success, my dear. Go ahead, enjoy all the amendments, and this material of amendment, whatever the material you have seen, this will also be sent to you. There will be a separate link given to you, my dear, using which either you can download or you can request for this notes. We will be sending you that as well. Right, my dear? Wishing you all success. Go ahead to enjoy, my dear. I'll catch up with you for the revision sessions, or I'll catch up with you for the final classes. Good day, my dear. Enjoy. Wishing you all success and everything in abundance. Stay blessed, stay healthy. Good day.